Hey everybody, good morning. Welcome to this weekend's video of the Strategic Swing Trader. I hope you're doing well. What a collapse in the market so far. Did you know that December is usually the most bullish month of the year with an average gain of about 1.6% per month? I mean per December basically on average. And this month, the market is on track to be the worst December ever. Actually, the worst December was in 1931, and we dropped 14.5%. Of course, the S&P 500 did not get established as an ETF, as an index fund until I think 1993. But if you were to back test the data, then in 1931 the S&P would have fallen 14.5%. We are, I think, down. I just did the math, 14.2% for the month so far. So very close to being the worst month and worst December ever. And but the month is not over, so we may get a rally, or we may get a drop still. If you recall, I did a series of videos about the market being topping out. The first one, if you look at the Black Room watch list on Facebook, the first one was recorded on October 4th, declaring this the top. And that's actually when I got out of I went cash, went to all cash in my 401k. But at any rate, if you go back and check, you'll see that the first video and I did a series of videos, was recorded on October 4th, and then the second one was on the 10th, and then I had several other videos why this was the top. Now, if you're part of the strategic swing trader, right now we have 4 swing shorts, 3 of which have already hit targets. And the market, so we've been on the right side of the market and have benefited from the volatility from the drop. So I hope you are too. And we are getting a little climactic, maybe one knockout punch, hopefully. I mean, I'm not hoping for a collapse in the market or the economy, but I think one knockout punch would be perfect here. This way I can close out the rest of the shorts. They again, 3 of the 4 have hit targets, first target, so I can close out of the back half and look to play long. If you look at my daily watch list here, the majority of it are climactic watches, okay? Such as Apple is not really that climactic, but it's Apple. I mean, Apple never looks like this, right? It's never gonna look like this. So this is almost as climactic as it's going to get. And if you look at the monthly chart, Apple is down, I think, 35% from the top into an area of overlapping candles, which is support on the monthly chart. So I do like Apple to bounce back up and potentially as a long-term hold. I really do. The next one on the list from the climactic watches is CAG, down 2 red bars, going vertical now. Let me take out my annotation tool so you can just see what's happening here. When you have a stock that's downtrending a lot, doesn't mean, in this case, let's say it dropped from 36 to 28, doesn't mean anything. It could go to 0. But when it starts to go vertical like this, that means that's not sustainable. That means it's going climactic. So that's what I'm looking for here. Edit, down a lot, wide range bar, big volume. Remember the XPO, played it swing long. Why? Because it was down a lot and then collapsed. Got the wide range bar, the big volume, and then the move up, right? So that's what I'm envisioning for some of these. Now I don't play them, and so which one am I gonna end up playing? Well, it depends on how they set up intraday. So I'll watch them, I'll put them on charts and look for an intraday setup. Do I know which one is gonna end up being the play? No, I have no idea. It depends on which way they set up. But I just wanted to share with you my list PRGO had a gap down, but you can see it was already down a lot, right? Coming from a downtrend and a vertical drop now. So I really like the PRGO. This stock is pretty difficult to trade, tends to be spready and whippy, but I do like it as a long. CBB, it doesn't have a wide range bar, so it still needs that knockout punch, right? Still needs the wide range bar. QEP is energy and down a lot, very far away from the 20, very oversold. Got the volume, we just need the acceleration, the wide range bar. WTI is another energy stock, I think. Yes, it is. So, so those are some climactic watches. Other watches that are not necessarily climactic that I'm looking to play long are the DOVA. It so when we look for climactics, there are two ways to play them. One is if they accelerate intraday, then you can just pick them off the top, buy the bottom. I mean off the bottom, buy the bottom, and keep overnight. The XPO was played at the bottom. I don't remember the exact price, but it was right at the bottom and then kept long as a swing because it went climactic on the intraday charts. Okay, but sometimes they don't go climactic on the intraday charts. DOVA is an example of that. A stock that was down so much, right, but never really went climactic. So if it doesn't go climactic, you can't buy the bottom because that's what novice people do is they try to buy the bottom and it keeps dropping. I only look to buy the bottom if the stock accelerates and goes climactic on the intraday charts. If it doesn't, then I wait for the transition A on the hourly chart. And what's a transition A? It's when the stock goes up, bases a little bit, waits for the 20 MA to curl, and then and then breaks out off of the rising 20. So that appears to be what's happening with the DOVA. Okay, so that's what I'm looking for here, is a transition A on the hourly chart. Similarly, the KOS is was in a downtrend, down a lot on the daily, got the spike in volume, and appears to be transitioning on the hourly chart. So those two are similar plays. Tesla is a different kind of a play. I don't normally play something that looks like this on the daily chart, but it's interesting. It's at the 200. The market fell apart on Friday. Tesla actually ended up on the day, and it's at the rising 20 on the weekly chart. So interesting, very, very sloppy, but does look higher to me still long term, maintaining the monthly uptrend, by the way, unlike the market, which is now in an all-out downtrend. So pretty interesting. The hourly declining 20 is right above. That's going to make it tough to find a good entry. Sometimes I find a play on the daily chart that looks really good, but on the hourly doesn't provide me with an entry, and I end up passing on it because I need to have multiple time frame alignment. It's a big, big deal. UNFI is a stock that's been, look at this, guys. Look at this. That's why you should never buy the bottom. Look, from 50, over 50 to $10. Should never buy the bottom unless you get the climactic sell-off, right, at the bottom, or you get the transition A. And that is what I'm looking at on the UNFI, is a transition A play. I already picked out the 3 trades for the strategic swing traders. They've already been posted, and they will get an email tomorrow morning at 8:30 a.m. with my 3 picks. But I can't reveal those. Obviously, they have to be a paying member to get those. But I just want to show you the entire list, basically. And feel free to pick from it. I picked 3 already. Um, Shorts, a lot more. The problem with the shorts is the timing with the market. It's a little too late to be starting new short positions. Okay, for example, one of the short positions that I have on is the HAE in a short because it was a climactic sell-off, a climactic rally on the monthly chart. See this? Look at the climactic advanced sell, and the weekly was a transition a transition C breaking down, and the daily was also a transition C breaking down. So okay, was a little late even here getting in it, but getting in short here would be unthinkable. So that's the issue with the shorts is I have a great list here, a great long list, but look at the market. This is the Qs. Down how many days in a row? So it's a little late to start. So you got to be really picky. If you end up taking any of these, you got to be really, really picky. I'm going to show you the entire list. As I said, I picked the three that I'm going to play for tomorrow. But here's the entire list. BMY is basically a daily breakdown, weekly sell setup. Okay? And plus a money bar or a shakeout bar. ELGX is a breakdown. Now you may think this is nuts, shorting a 60-cent stock. It isn't at all. I don't want to say I do it all the time, but I do it whenever it comes up. What matters, this is a big deal. What matters is price action, not the price of the stock. Okay? The pattern is what matters. In fact, what's today? Uh, Here, I don't know what day it was, but PIR, just a couple days ago, on the 20th, was my best play. Let me look up my P&L for that day. What day did we say? The 20th. The 20th. Okay, here's the 20th. Just want to show you. This is my day trading count. But look, PIR, $3,200 almost, 31.85 out of $4,000. So 75% of my trade, my profit for that day came from PIR. And then the second most profitable trade was the Mankind, MNKD. This is, in day trading, I focus on gaps. So that's mostly what I do. And this was a gap down that I shorted. It dropped from $1 almost to 50 cents in one day, right? And then what was the other one? Mankind, MNKD. A gap down and then a big drop too. And both were played short, not long, short. In fact, PIR also made 800 or 900 bucks yesterday, shorting the PIR. So what matters is always the price action or the pattern, not the price itself, because at 60 cents, it can go to zero. It can still always drop another 100%. So at $4, you can gain 100% if you short it and it goes to zero. At 60 cents, you can still gain 100% if it drops and goes to zero. Now, what if it goes to 30 cents? That's still a 50% gain. What if a $20 stock goes to $10? That's only also a 50% gain. Does that make sense? So the price of the stock does not matter. It's the price action that matters. And this is as pretty as it comes, almost. Stair stepping lower, stair stepping down, right off the declining 20. The hourly has a base, a clearly defined base under 60 cents. So I actually kind of like it. Okay, so I hope I went off tangent a little bit to discuss penny stocks because a lot of people will not even come near anything that's under $5 a share in price, right? And in this case, this is a 60-cent stock, and I don't really care. I've shorted 20-cent stocks and covered them at 5 cents. I've even shorted a 4-cent stock. I did 50,000 shares of a 4-cent stock, and it eventually went to zero, but I covered it at 2 cents. So happens all the time. All right, Fox is a breakdown, a little extended, but certainly looks slower. Fred is very bearish and has a 1, 2, 3. 1, 2, and if we break down, it'll be 1, 2, 3 on the daily chart. A lot of these, if you do, my recommendation is be very quick with taking profits, meaning you just wait for the market to drop one more bar and then bam, out. Okay, that's my recommendation. Or you wait for these to give you one big red bar and then out. So be quick taking profit because we're so extended to the downside. GTHX is a 1, 2, 3. I know what you might be thinking, that it's far away from the 20. It's extended. It isn't because it gapped. Does that make sense? When a stock gaps from the 20 MA, that's not extended. When I see a stock that's down a lot and it gaps down, for example, what was the other one? The Climo, PRGO. That is extended. You know why? Because I measure extension, not I remove the gap. Basically, remove the gap and measure how far price was prior to the gap from the 20 MA, the 20 period moving average. There, and then you have this big sell-off too, right? The two combined makes for a very extended stock, but you got to remove the gap. Okay, so on the previous whatever it was, GTAHX, it wasn't really that extended, very close to the 20. Now again, it's not like it has zero extension. It did have a drop preceding the gap, so it's a little extended, but 1, 2, 3 as a short. Okay, and what isn't extended right now with the market collapsing? What isn't extended? Very few. This stock has zero extension right off the declining 20. That is not extended at all as a sell setup. I actually like the HIG more. Look at the top in tails. Pretty nice. Look at the hourly chart. Curling and creating a large top. The bigger the top, the bigger the drop. Okay, so I actually like the what is it, HIG more. Han breakdown similar to the FCX. HX another penny stock, $1.90, but breakdown also I kind of like it. Let's take a look at the hourly chart. It's pretty good. HX as a short. So I like the HX on the hourly. Laser is another breakdown. This I think looks better on the hourly. It does than it does on the daily chart because the daily has a flattish 20. See this? That's a flattish 20. The hourly has a nice top and tails there and a base breakdown. And MCHP is a weekly sell setup. So that's not too bad. Let's take a look at the weekly. It is a weekly sell setup. Monthly is all right. Bearish. You don't have to have all the time frames setting up. You just want to make sure that they're all saying lower, lower, right? And then one time frame, which for me is the daily, has the setup, the pattern. Mankind is a 1, 2, 3, short, not a long, right? $1 stock, but short. Um, NBIX as a breakdown probably looks better on the hourly, and it does. On the hourly chart looks good. SPXC is a breakdown. Surf is a 1, 2, 3, 4 pattern as a short. Switch is a breakdown. And then TAL is a weekly sell setup. I like the TAL a lot. Right off the declining 20. TAL. So this one I really do like. TCP is a breakdown. Let's take a look at the weekly. And the weekly is kind of a sell setup on the TCP. Monthly is a sell setup also. So it looks pretty good across the board. I know I went over these fairly quickly because I have a pretty long watch list this time, and I like to keep the videos uh, usually short and sweet. But I hope you benefited from the discussion, and I hope you are really, really taking advantage of the volatility in the market. I want to close this out by wishing you a happy holiday season and a prosperous new year. Thanks for watching and enjoy the rest of the weekend. Take care, everybody.